Good morning viewers, a warm welcome. This is Sage. You're watching 𝐿𝐴𝐚 TV live from the Sydney studio, and this is the Global Markets Roundup show. Let's take a glance now at how the global markets fared last night, starting with the US markets. The US stock prices fell while bond prices and the euro firmed on Thursday as investors trimmed risk and fled to safety amid a cloudier outlook for the pace of economic recovery. And Wall Street closed lower on Thursday, retreating from record closing highs in a broad sell-off driven by uncertainties surrounding the pace of the US economic recovery. And the Dow Jones Industrial Average fell 256.34 points, or 0.74%. The S&P 500 lost 36.09 points, or 0.83%, and the Nasdaq Composite dropped 101.36 points, or 0.69%. And let us now take a look at some important news. A labour shortage continues to hurt the industries despite a record number of jobs created by employers in recent months. And also the increasing demand for consumer goods has met with a supply crunch, leaving businesses frustrated as the prospect of losing income haunts them. The mixed signals from the economy may have left many investors baffled, evident from the muted response in the past sessions. And besides, the Delta variant of COVID has magnified their concerns. All segments of the S&P 500 saw broad losses, and the financial and basic materials were the biggest losers, while the industrials traded flat. Oil and gas stocks also fell despite the soaring domestic gasoline demand. Moving on now to the newsmakers. The Chinese stocks continue to decline after Beijing launched data security probes against several big companies listed in the US, and DD Global plunged 4.53%. Alibaba Group Holdings declined by 3.82%. Baidu fell 3.60% in the intraday trading. The tech stocks Apple shed 0.97%, Microsoft declined 0.86%, and ASML Holdings dropped 2.57%. Nvidia ticked down as well, 2.33%. Facebook lost 1.28%, while Amazon.com gained 1.34%. Moving on now to the futures and commodities market. The gold futures were up 0.06%, silver decreased 0.51%, while copper fell 1.24%, and the Brent oil decreased 0.01%, and WTI crude increased 1.44%. The bond market too saw declines. The US government bonds yields continued their recent decline on Thursday, with 10-year Treasury yields touching their lowest levels in nearly 5 months as investors' worries persisted that the best part of the economic recovery may be over. And the 30-year Treasury bond yields were down 0.79% to 1.929, while the 10-year bond yields decreased 2.01% to 1.295. The US dollar futures index decreased 0.30%. This was the latest from the global markets. Now it's time for a short break, but after the break, we'll take a look at the European and the Asian stock markets. Crypto talk by 𝐊𝐴𝐚. The crypto market has been red hot given the Bitcoin rally since the past year. And now the most famous cryptocurrency has got competitors, Dogecoin and Ethereum. If the crypto market excites you, tune in with me, Sage, to know the latest developments about the existing digital currencies and the new ones that are joining the race. I'll help you understand the opportunities and the risks the crypto market has in store for you. For all the digital currency related developments, continue watching Crypto Talk by 𝐊𝐴𝐚. Welcome back. Thanks for joining us, viewers. This is Sage, and you're watching 𝐿𝐴𝐚 TV live from Sydney, and this is the Global Markets Roundup show. Let us now take a look at the European and the Asian stock markets. The European stocks sank on Thursday, posting their worst session in 2 months, with all sectors in the red, as concerns about the resilience of economic recovery sent investors fleeing to bonds. The Pan-European Stock 600 index dropped 1.8%, with the European Central Bank moved to shift its inflation target to 2% from below but close to. That figure seen as dovish and doing little to cap declines. The London markets traded in a red zone as the latest Federal Reserve meeting minutes indicated that the central bank had discussed slowing down the stimulus, and the FTSE 250 listed WH Smith shares went down by about 1.64%, although it had reported an accelerated recovery in sales as the COVID-19 restrictions eased down. And furthermore, the company had lifted full-year guidance boosted by strong performance in North America. The house builder Persimmon shares dropped by around 4.79%, although the company stated that the housing boom had taken the sales past pre-pandemic levels, and moreover it had accelerated the capital returns to shareholders. Eurozone bond yields fell further on Thursday as a global bond rally continued unabated, and the ECB tweaking its inflation target was broadly seen strengthening the central bank's ultra-easy monetary policy stance. And Germany's 10-year yields were at 0.315%, down about 3 basis points on the day, while European stock markets sold off. And moving on now to the next segment in our show. The Asian markets too saw a decline last night. Let's take a look at the Tokyo market to begin with. Japanese shares fell on Thursday as the country's plan to reintroduce a state of emergency to contain a resurgence of COVID-19 infection stoked worries about an economic slowdown. And the Nikkei share average slipped to 0.88%, its lowest close in more than 2 weeks, while the broader Topix was down 0.90%. And the Japanese government bond yields edged down on Thursday, with the 10-year yield dipping to a 6-month low after a plunge in US yields, and as Japan looks set to declare its 4th state of emergency on COVID-19 infections. The 10-year JGB yield fell to as low as 0.020%, its lowest since the early January, and last stood at 0.025%, down 0.5 basis points on the day. Let's move on now to the Chinese market. Well, China's stocks closed lower on Thursday as well, weighed down by financial and energy firms, while investors pondered Beijing's surprise hint at monetary easing. And the blue chip CSI 300 index ended 1.0% lower, while the Shanghai Composite Index declined 0.8%. The yuan weakened on Thursday as the dollar traded near its highest levels in 3 months, and after China's cabinet floated the possibility of cuts to banks' reserve requirements to support economic growth. The spot yuan was changing hands at midday, 71 pips weaker than Wednesday's late session close. And now the South Korean market fell steeply as well, and the South Korean shares posted their sharpest drop in nearly 2 months on Thursday as record daily COVID-19 cases prompted authorities to consider imposing a semi-lockdown in the capital Seoul, and both the won and the benchmark bond yield fell. The benchmark KOSPI closed down 32.66 points or 0.99%, logging its biggest decline since May 13th. It slid 0.60% on Wednesday, and the won ended on the onshore settlement platform, the lowest close since October 16th last year, and 0.60% lower than its previous close. And that's how the European and the Asian markets performed last. It is time for another short break, but after the break we will look at the Australian stock market, so please stay tuned with 𝐊𝐼𝐴 TV.
Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
Where the property market is headed next.
what the world is doing to become more environmentally friendly.
Apart from tracking the daily market charter.
Be on top of the latest news and announcements
With 𝐊𝐼𝐴 TV.
Welcome back, Sage here. You're watching 𝐊𝐼𝐴 TV live from Sydney bright and early this morning, and this is the Global Markets Roundup show. Let's now take a look at the Australian stock markets. On Friday, the ASX 200 is likely to stay lower in the opening trade on the backdrop of a weaker Wall Street closing. And also the country's most populous state, New South Wales, reported its highest daily rise in local coronavirus cases this year, fueling concerns regarding an extension to restrictions. The ongoing Chinese tech rout and a weaker closing on the NASDAQ 100 in the US are pointing towards a softer opening of technology shares on the ASX, and as a result, shares such as BrainChip Holdings, Afterpay and Xero could trade lower in today's session. The energy players such as Origin Energy, Viva Energy Group and Oil Search could see investors' interest today. The Australian gold miners such as De Grey Mining, Silver Lake Resources and Newcrest Mining could trade with a slight bearish bias. The local miners such as BHP Group, Fortescue Metals Group and Rio Tinto may shed some gains from Thursday's session. And thanks for joining us on that report. That's all for now. Please stay tuned with Calcine TV for more live market updates. We'll be back with more of the news on the markets, economies and diverse themes and sectors. Sage signing off for now.